a strategy even better than ICT Silver Bullet, which is 100% mechanical. This is exactly what Nexus Blast Trading is sharing with us. By looking at his journal, in 2023 we could have gotten a return of more than 100R. So with the new year coming, you can maybe make this strategy your bread and butter setup. So today we'll review the strategy and test it out ourselves to see how it performs. I will also give you a bonus by sharing 3 specific trading scenarios that you should really keep in mind when trading this strategy. I'll provide examples which you can screenshot to help you visualize them and remember them. So if you're ready, please leave a like and subscribe, and let's start. Nexus' journal might not be as in-depth and as amazing as mine, that's true. But he is sharing it for free online for everybody, and I really respect that. It's actually one of my students that talked to me about his channel. Because just like we are doing in my mentorship, he is focusing on minimizing as much guesswork from his trading as possible. And we do that by making the strategy as mechanical as possible. So let's take a look at the checklist. Alright, so here's Nexus Blast checklist that you can get from his website. So first of all, we need to identify a liquidity rate of the London high or low, or of the New York AM high or the New York AM low. And the reason why is because if you're trading the New York AM, you'll be focusing on the London session, either high or low. And if you're trading the New York PM session, then you'll be focusing mostly on the New York AM high or low. But you can also trade the London high or low during the New York PM, right? But because personally I only trade the New York AM, I'll be focusing only on the London high and low for this video. Then we'll have to identify the premium and discount zones from these previous highs and lows. And this is one of the 3 components I'll be showing you at the end of the video. Then of course, just like most of our strategies, we'll be avoiding any high impact news. Then the way Nexus Blast is working is you'll be keeping track of if a level was taking out or not by changing the color of the level. But just for this back test, you'll see that we'll be going very fast and we'll just see if a level was taking out or not. Then once the level is taking out, we'll be looking for breakout structure with a body. So this is very important. And then a bonus tip here, just like he did in one of his videos, I'll be adding an indicator which will allow you to make sure that you're always working with a high probability breakout structure. And then we'll wait for, of course, a fair value gap on the 5 minute. We'll put the entry at the 5 minute fair value gap. This is an optional step here, but it's talking about using an opposite fair value gap, but we won't be going deep into that. You can look at his channel if you want more details about that. And for us, we'll always go for a 1 to 2, but you can work out different way of taking profit and taking partials. But I just want to make it very simple and present you a strategy that you can start backtesting and using your journal make it specific to you. We'll be using limit orders. You can also use market order if you prefer. And we'll cover the stop loss at the previous high or at the previous low. And very important here is stating that you should always target a minimum of a 1 to 2. I looked at his journal and I saw that there was of course a high win rate going for a 1 to 1, but for most people I think going for a 1 to 2 is a pretty good way to start. So we'll be backtesting S&P 500, and just like all the videos in this playlist in this series, I'm backtesting February of 2023 to be fair for all the strategies. And you need 3 indicators for this strategy. The first one is a fractal. So the fractal is one way that Nexus Blast is using to make sure that the highs and lows that you're using for the breakout structure are high probability. So that's one way of doing it. And what I like about this one is that it's very mechanical. Some people could consider this a low, but since we have only the fractals on important lows, based on this indicator at least, you're sure that your way of backtesting and your way of trading is always consistent. So I think that's a good way to make it mechanical. I approve of that. I think that's a good idea. And then the other thing I'm using to mark out the highs and the lows for this strategy is the session indicator by FX Replay. And on TradingView, you can use this indicator that I shared in one of my previous videos that I just linked out on the top right. So you can check it out also. So just like Nexus Blast did it in his video, to make it very simple, what we will consider the London high and low is everything from 12 AM to 8 AM. So everything before the New York session. We'll be waiting for a sweep of the level, and then breakout structure and fair value gap. And if you're interested to trade the PM session, then you'll be looking also at the New York AM session. So in this example, it's everything from 8 AM to 1 PM. So you'll be looking for a sweep of either the high or the low, and then the same entry criteria. So I'll show you all the examples I was able to find for this strategy. All right, so we're at the beginning of the New York session based on Nexus Blast strategy, and we have the low and the high. Right? And we'll be waiting for either one of those levels to be taken out. Alright, so we just reached out for the high, and then we can wait for breakout structure. following the fractal. So you can see here this fractal, this low, this is considered an important low. And we just had a body close, so don't forget that we need a body close for this strategy. And we have the fair value gap right there. So we can just put the order. And go for a 1 to 2. I like that the 1 to 2 is exactly at the opposite liquidity point. Alright, so we got the execution right there. We came back to this order block. Let's check if we can get take profit.
Nice.
And take profit. So that's the first trade. Let's find another one. Alright, so we have the high and the low. Let's be patient now. So we just took out the high and we had a big displacement. We do have the fair value gap right there, but we didn't get a body close below this low. So we'll need to wait. Alright, so we just filled up this fair value gap, you see. Let me write it. And then we just created this one. So because this one was already reached, I'm going to use the second one on the second leg. So entry at the beginning, we'll cover the stop loss in here. And we'll go for a 1 to 2. Because yesterday's price action was pretty bullish, I'm expecting at least a comeback to the discount of this leg. So for the take profit, makes sense. So we came back to the fair value gap. Nice reaction there. And take profit. So very, very nice. And we're currently at 4%. So we have the high and the low. Okay, so we just took out the low. And you can see here this fractal that we just broke using a body. So now we need to wait for a fair value gap. I don't see any for now. Perfect, so a very big displacement, I like that. Very important, with the high broken. So now we can just put the order. I'll cover the stop loss with this low and go for a 1 to 2. So we'll be targeting not far from yesterday's high, so a very good liquidity point. Quick comeback for the execution, and we'll see if we can reach the TP. Beautiful. And this one went pretty far, almost for 5 hours, so you can try different things for a take profit. Also note that some people are using the 50% of the fair value gap. I think the consequent encroachment it's called. I don't remember the terms. It's not important anyway. But you can see that you would have been missed in here. You can try different things to solve that. Maybe put half of the order at the beginning and then another half there. You can have 2 trades running. Or you can just always go for the opening of the fair value gap. But nice trade right there. We're currently at 6%. Once again, the high and the low. Alright, so we just took out very quickly the low. Let's see if we can have the breakout structure. Alright, so beautiful breakout structure with a huge fair value gap right there. So for now, everything looks nice. And we just broke out this high. TP not too far from yesterday's high. Nice execution, nice respect of the fair value gap or the block. Let's see. Alright, so first loss of this backtest. But we're still at +5, and to be honest, I don't think there's anything wrong with this trade. You can try to study your journal to see if there was something we missed here, but other than that, not every strategy is 100%, so we take the loss. Let's look for another trade. Alright, we just took out the low. Let's see if we can have a breakout structure with a fractal and a body close. Almost there. Almost perfect. So we have the body close, we have the fractal. And very special case here, interesting, we have 3 fair value gaps. I think that's pretty rare. Usually we see 2 of them and I like to use a lower one. But with 3 fair value gaps, I don't think we'll reach to the lower one. So we'll just use the middle one. If it misses, it misses. Whatever. And with it 1 to 2. In such cases, what I like to do also is you can use a fib, but just to keep this strategy simple, I'll just use the open of the fair value gap. Which worked very nicely actually. Almost there. Perfect. So you see that the take profit was right before the opposite range, and that's a good thing. Let's see if we can find another trade. We just took out the high. Let's see if we can get a breakout structure. Yeah, so clear breakout structure. We have the low. And we have this huge fair value gap, which to be honest, I don't like seeing such a big fair value gap. But let's just respect the rules and take the trade. Also, something very interesting here is that I think that's the first trade that is occurring before the 9:30 open. So you know, for indices and futures, the 9:30 open is very important, and I think that's the first trade I take before the 9:30 open. So I'm not sure if it's a good thing, but we'll see the result. Yeah, straight to stop loss. So maybe this was a loss because of the fact that it was before 9:30, but I think I saw some of Nexus Blast setups which happened before 9:30, so that's why I allowed this one to be taken. Me personally, and also for this backtest, I stopped trading at 11:30, so 30 minutes right before lunch. Let's see if we can find another trade. Currently at 6%. Alright, so I was not able to find any other trades, and we finished the month with 6%. Very reasonable, to be honest, with a 66% win rate. So I'm sure if you look into Nexus Blast channel, you can find more specific things to make this strategy get a higher win rate. But as a first time trying this strategy, I think that's pretty fair. Only using the 5-minute and being very, very mechanical, this has a lot of potential. And also remember that I did not trade a PM session for this month. So in his results, he was actually trading 2 sessions, which should increase his returns per month. Alright, so let's now cover the 3 things you should really pay attention with this strategy, or to be honest, any of the strategies you're using. And I'll find some examples for each of them. So the first thing you need to avoid is seek and destroy days. So here, a perfect example of seek and destroy environment. You see that we were waiting for either the high or the low to be taken out, right? But look at this candle. This was on, let's see what news this was. This was the consumer price index. So, and it happened during Valentine's Day. That's pretty funny, a seek and destroy day. But anyway, during those days, I wouldn't suggest trading. You see that we took out both the high and the low. So the impatient trader in those cases would start looking at the breakout structure, right? Still waiting for either the slow or this high to be taken out. But in those days, please just wait for the next trading day. It's better to preserve your capital and trade on better days. Anyway, for this strategy, we talked about not trading during high impact days, and this is exactly the reason why. Don't trade from that point. Alright, so the second thing that you need to be careful of trading this strategy is you need to define when you're going to cancel a trade. So we're using mostly limit orders, right? So you need to define for yourself, when am I going to cancel this order? Is it based on time? Is it based on if we already took out the opposite liquidity that you're looking to take out? Or is it because the trade already reached your take profit? This is personally my favorite one, because if we can take this example right there. So we had the sweep of the low, we have this breakout structure, and what do we have here? A fair value gap, right? So I would have my order at the top, stop loss below this low, or you could also use this low and go for a 1 to 2. So let's see. On my day-to-day trading, personally, if my entry isn't triggered and we already reached my take profit, I just simply cancel the trade. This is a very simple and mechanical way of working because there's no gray area, right? Some people could say, because we reached this fair value gap, I will now cancel my trade, right? Or other people could wait for this level to be taken out, which is the closest fractal. Or some people would wait for the opposite range to be taken out before canceling the order. So this is the second thing that you need to be careful of with this strategy, or any other strategy to be honest, is define when you're going to cancel your trade if you're not triggered into it. And my favorite one, like I said, once it reaches take profit, you cancel the trade. And so the final thing you should really pay attention to is your discount and premium levels. So remember when we looked at the checklist that Nexus gave us, he mentioned taking the premium and discount of the range that we're working with, right? So the way I like to apply that in my own trading is using the 2 days range. So I like using the 2 days range because it gives you kind of an idea of where we are. I know it's not perfect. I know that usually most people are using legs to define their premium and discount, but I found it difficult to choose where does my leg start. You know, because it will depend on the time frame that you're working with. It also depends on how you define highs and lows. So if we take yesterday's price action right there, would you define the leg starting here until here? So for example, this leg, or you would have this leg to be considered as a discount. But anyway, the way I try to make this concept much more mechanical is I just look at 2 days price action. So starting at 12 a.m. and then how far high and how far low did we go? And just like that, I have my range. So for me, this is my premium and this is my discount. So one thing that you need to be careful of is if we look at this example I was able to find, you can see here that technically we broke with a body, this fractal, right? Then we also have this fair value gap. If we had to follow the rules, technically we would need to enter here and then use this low. The main issue that I have with this setup here is that the fair value gap that I'm using is in a premium. In here, I'm buying in a premium of the 2 days range, and I don't like that. So one thing you should maybe try to look in your trading journal that I was able to find in my own is that usually when I'm trying to buy in premium or trying to sell in a discount, this usually goes against me. Sometimes it works, sometimes it doesn't, but overall, I'm getting much more wins and I'm avoiding much more losses by following this concept. So for this specific example, I wouldn't take this trade because I would buy in a premium of the 2 days range. And if you're looking for a community in 2024 which focuses on concepts like the one just covered and on real trading data, we have spots available, so simply apply using the link in the description. And with the new year coming, here's how I would learn trading in 2024 if I could start all over. I wish you health and success in 2024. Let's kill it.